Muy buenas, chicos. Hoy vamos a hacer un directo fuera de horario habitual, ya que vamos a... Un segundito. Vamos a hacer un directo sobre el impacto de la FOMC, o bueno, de las actas de la FOMC, mejor dicho, sobre el mercado, ¿vale? Entonces, bueno, nosotros ya hemos hecho la operativa de hoy. Hemos podido sacarle al mercado 485 dólares, perdón, 487,50 dólares menos contratos, y la verdad es que la sesión ha sido un poco... Ahora os explico un poquito la idea, dónde han estado las claves de la sesión. Lo hemos hecho en 4 operaciones, ¿vale? Lo cual, lo que no me gusta realmente es que haya sobreoperado para llegar a ese importe, ¿no? Sobre todo viendo el movimiento de subida, ¿vale? Que ha dado una apertura y que era bastante evidente. Pero bueno, al final en este trabajo marca sí o sí los resultados, ¿vale? Y a pesar de no haber hecho el mejor trading, en este caso, en el día de hoy, ¿vale? Bueno, podemos estar contentos de que no nos hemos estrellado y hemos estado en el lado correcto del mercado y hemos podido sacar beneficio. Dicho esto, ¿vale? Antes de que empiece, quedan 10 minutos para la salida de... Bueno, para el meeting de la FOMC, para las actas de la FOMC, si no estoy equivocado. A ver, vamos a mirarlo aquí en Forex Factory. A ver, la acta de la FOMC a las 2 de la tarde y sí, y a ver, son las 1:55, quedan 5 minutos. Bueno, aquí en España son las 7:55. De hecho, inventarios de crudo, vale, también, ok. Vale. Bueno, en estos 5 minutos vamos a intentar explicar un poquito la idea, ¿no?, que hemos tenido a la hora de... Vamos a ponerlo ahí que se vea mejor. Cuando el mercado, cuando el SP500, el mini SP500 abre muy cerca, ¿vale?, muy cerca del gap, es decir, del precio de cierre de la sesión regulada del día de ayer o del día anterior, de la sesión previa, ¿vale? Es bastante probable, o tiene una probabilidad bastante alta de que se vaya a cubrir ese gap, ¿vale? Tiene una probabilidad alta. Entonces, claro, obviamente, aunque esté muy cerca, tenemos que validarlo con las herramientas adecuadas, ¿vale? En este caso nosotros ya sabéis que operamos con Profile, ¿vale? Con Profile, Order Flow, Order Book, Scanner, etcétera, etcétera, ¿vale? Cada uno de vosotros que lo opere con los filtros y validaciones que crea conveniente, por supuesto, pero que sepáis que cuando el precio abre cerca es decir, que ha tenido una sesión una sesión ETH electrónica, ¿vale? Que desde su apertura hasta su cierre el precio cierra cerca, ¿vale?, del cierre de ayer, o mejor dicho, mejor explicado, ¿vale? Si entre las sesiones reguladas de RTH, el cierre de ayer y la apertura de la regulada de hoy, en este caso, son muy cercanas, de antemano tener previsto que es bastante probable, ¿vale?, bastante probable que el gap se pueda cerrar. Cuanto más cerca esté, por supuesto, mayor es la probabilidad, ¿vale? No me atrevo a daros un rango de puntos, ¿vale? Si 5, si 6, si 3, bueno, obviamente 2, 3, por supuesto, ¿vale? Que la probabilidad se dispara de manera muy alta, pero no me atrevo a daros, oye, a partir de 6, ¿qué tal? A partir de 8, tal. Bueno, esto es un trabajo que os lo dejo para vosotros, yo no lo he hecho, yo simplemente cuando veo que el precio abre relativamente cerca sobre el cierre de la sesión de ayer, mi objetivo preapertura, mejor dicho, más que premarket, preapertura, es analizar las otras herramientas o las herramientas de volumen para ver si el volumen está apuntando, en este caso tenía que estar apuntando a compras, ¿vale? Ya que fue un gap a la baja. En este caso, vamos a ver aquí, ¿vale? Cerro aquí y abro aquí, ¿vale? Es un gap relativamente pequeño, ¿vale? En apertura se veía claramente cómo el volumen que se estaba posicionando era un volumen de compra, es decir, superaba tanto en órdenes de compra a mercado como en compromisos de niveles superiores, ¿vale? De dinero institucional, ¿vale? Superaba la compra a la venta, ¿no? A través de los escáneres, a través del escáner, mejor dicho, ¿vale? Podemos ver cómo, fijaros, cómo la parte izquierda del escáner, esta ventana de aquí, es el sentimiento alcista y este es el sentimiento bajista. Si podéis ver, ¿vale? En los primeros tramos de la sesión, fijaros cómo, o primeros minutos de la sesión, fijaros cómo desde las 9:30 hasta las 10, vamos a poner, ¿vale? Hasta las 10, sin contar el de las 10, fijaros la cantidad de prints que hay en compra. Sin embargo, desde las 9:30 hasta las 10, sin coger el 10, ¿vale? Fijaros los prints que hay, que es la mitad en venta, lo cual a inicios, fijaros que 9:30 y 31 ya estaban posicionados, es decir, en el primer minuto, mientras el primer print de venta salió en el 33, ¿vale? Es decir, el tercero salió en el 41. Si nosotros nos vamos al 41, nos vamos aquí al 44. Fijaos la diferencia, aquí solo habían 3 prints, ¿vale? Cuando aquí habían ya pues 3, 6, 9, 10, 11, 12, 3, no, espera, perdón, 41. 3, 6, 9 y 10. Es decir, era muy evidente que la cantidad de contratos que apostaban a que el precio iba a subir en apertura, o sea, insisto, post apertura, minutos después de la apertura, 5 minutos después de la apertura, es que el precio se tenía que ir arriba, ¿vale? Order flow también marcaba, bueno, etcétera, etcétera. Entonces, filtrarlo de la manera que creáis conveniente, por supuesto, ¿vale? Filtrarlo, vamos a cambiar. Filtrarlo de la manera que creáis conveniente, pero quedaros con ese patrón. Si os vale de algo, ¿vale? Los que operéis el SP, el mini SP en sesión regulada, pues tenéis ahí un patrón que funciona muy bien, la verdad es que sí, ¿vale? Lo único que tenéis que vosotros saber hacerlo funcionar, obviamente, ¿no? Insisto. Filtrarlo, ¿vale? Etcétera, etcétera, ¿vale? Para que os podáis aprovechar de ello, ¿ok? Vale, vamos a ver, ¿qué hora es? Son y 57, quedan 3 minutos para lo que hemos dicho. Vamos a ponerla así en visible aquí, a ver si dicen alguna cosa, aunque sea en bajito, para que no os moleste mucho el audio del sistema, ¿vale? Porque normalmente las minutas de la FOMC, o las actas de la FOMC, como queráis llamarlo, suele generar gran impacto de volatilidad, ¿vale? Entonces, vamos a esperar a ver. Vale, por arriba, es que claro, es jodido, ¿eh? A ver, obviamente en mi caso tengo el día hecho, lo cual no voy a meterme en una posición a lo loco, ¿vale? De hecho no sé ni si me voy a meter. Mi idea va a ser intentar buscar algún tipo de ineficiencia, que se suelen dar bastantes, a través de order flow, lo podéis ver perfectamente, ¿vale? E intentar ir a buscar el cubrimiento de esas ineficiencias en este caso. Es importante que estemos fuera del mercado previo a la noticia para no quedarnos atrapados, ¿vale? Súper importante.
Welcome back. NVIDIA reports after the bell, and analysts expecting strong results as shares sit just about 5% from its July all-time high. Josh Lipton is here with some of the key numbers to watch. Josh?
So, Kelly, it's been a good year for NVIDIA bulls. That stock has ripped higher, surging about 50% now so far in 2021. That far outperforms the SMH, the ETF that tracks the chips. And also looking for EPS of 101 from NVIDIA today after the bell on revenue of $6.33 billion. But Chris Rowland of Susquehanna says one big number for him, Q2 data wants to see $2.27 billion there. Investors focus on that because those chips carry higher margins than gaming. And speaking of gaming, NVIDIA's other big segment, Chris Rowland says he expects another strong quarter there. But there are questions about that quarter ahead as economies reopen. And remember, those chips are also used for cryptocurrency mining too. With all the volatility around crypto, it will be interesting to see how that impacts demand for NVIDIA's products. Crypto mining isn't a core market for NVIDIA, but it can help or hurt results on a given quarter. Back to you all.
Josh, do you ever get the feeling they're trying to kind of distance themselves from that narrative, at least? Because obviously we saw for a period of time where they traded quite tightly, crypto and NVIDIA, but obviously NVIDIA has so much else going on and going for it, frankly.
Well, they did actually introduce new products, remember, Kelly, just for crypto miners. And those products, you know, miners going to use those chips to handle those transactions. So actually today after the call, I think there'll be a lot of questions for the CFO about what sales for those chips actually look like.
Yeah, impressive. All right, Josh, thank you very much. We appreciate it. Josh Lipton, NVIDIA reports after the bell this afternoon. That does it for the exchange, everybody. Thank you for joining me, but don't go anywhere because Power Lunch starts right now.
Vale, estábamos en este tramo de subida. Fijaos que el objetivo al final era comprar esta parte de aquí abajo para venir a cerrar, o sea, aquí, a los 38.25, ¿vale? Al gap. Fijaos dónde se ha ido. Pero es más, fijaos dónde tenemos nosotros el nivel donde valoramos o valorábamos que el precio debería llegar ahí arriba. Debería subir, ¿vale? Veíamos que este nivel se estaba comprometiendo. Sí que es cierto que después, durante la sesión, ese compromiso de dinero posicionado en ese nivel ha ido menguando, ¿vale? Ha ido cayendo y el dinero comprometido no era tanto, ¿vale? Bueno, parece ser.
The land, the Dow's down 46 points, the S&P is down 6, and the NASDAQ is up 6 right now. As for the bond market, well, the yield on that 10-year up just slightly, and home builder stocks, there's the 10-year 1.295%. By the way, the home builders are higher despite a sharp drop in housing starts, which fell 7% last month, well below expectations. But as we spoke with Bill Smead about last hour, he's still bullish on them, Tyler. He says for the long run.
All right, the Fed minutes, the release of them for the most recent meeting back towards the end of July. Those minutes are imminent. Investors are looking for more indications of when the central bank may begin scaling back its stimulus. Our panel is standing by. It is a murderer's row of Fed analysis here. Steve Leisman will have the key headlines. Ed Yardeni, president of Ed Yardeni Research, is offering his insight and analysis. Bob Pisani, Rick Santelli, they will bring us immediate market reaction. All of you, welcome. And Steve, get familiar with these minutes. I'll come to you when you raise your hand and let us know that you have digested at least the headlines. But Ed, you've been bullish. I assume you remain so, even though earlier this week we started to hear some of the rumblings that the Fed is about to start talking about pulling back on its monetary stimulus.
Well, I think that the market has got to know the tapering is coming, and the economic news has been strong enough, even in the labor market, which has lagged behind real GDP. Real GDP hit an all-time high in the second quarter. So the economy is doing just fine, and the Fed is behind the curve here, actually. But look, the market, I think, has been talking about this tapering tantrum for so long that it's probably just not going to happen when the Fed finally decides to taper. And I think that'll probably happen at the September meeting and be implemented maybe in November.
And so, even despite the fact that the last time the Fed began raising rates and tapering, pulling back on its bond and fixed income purchases, the market did not react well. Was the problem there miscommunication? It seems like this time they're bending over backwards to communicate fully.
I think to a certain extent it was miscommunication. They kind of got the market by surprise. There's not going to be any surprise this time around. So I think the market's anticipating it. And look, the economy is doing well. Earnings are doing great. I would say that tapering followed by some raising of interest rates would be a clear sign of confidence in the economy, that it can actually grow on its own without all this stimulus.
Rick, I want to turn to you for also a mention of these reverse repos, which are huge. So when we talk about liquidity, is that a sign to you from the markets about conditions here, even as we're about to listen for anecdotes from the Fed about what they think financial conditions are?
Yes, and it's a two-way street on so many levels. J.P. Morgan has done some research on the liquidity in the Treasury market. Remember, sometimes Japan, one of the largest sovereign debt markets as well, trades by appointment only. So there's an issue there. And the more the Fed buys and puts kind of in a corral, the more that may be impacted. Some of these headlines are out. And, of course, the Fed doesn't want to team up or pair the taper with any type of increase in rates. They've said that many times before. As I look at markets, interest rates are moving down a bit. The dollar index is down about a sixth of a cent or so since 2 o'clock Eastern. And the other issue that seemed to be cropping up is that the Treasuries market right now is probably in a mode where the participants have so much cash and so many Treasuries laying around that liquidity, as you pointed out, is not only an issue for do we have too much, but it really questions the notion of, is the Fed doing more damage by taking these securities out, and is it really going to alter any of the supply chain materials, labor shortages out there? And a couple of Fed officials, of course, have brought that point up. And one more thing very quickly, also seeing a lot more headlines on participants say that recent pricing issues are temporary. And that's kind of a little bit of a white lie, Kelly, because as Steve knows, and we've discussed many times, the temporariness is the rate of change to the upside. The fact that these prices may stick could still be a zero inflation CPI or PPI number when we get around to that.
Right.
I'm just not sure the average American puts that together.
Well, I think they do. They feel it, that reset, even if it doesn't keep rising, like you said. Let's get over to Steve Leisman for the details of the Fed Minutes. Steve?
Yeah, just a few headlines here, Kelly, and we'll get back to it in just a second. But no decision was made about asset purchases. There seemed to have been quite a long discussion about it. There seemed to be a staff presentation about the various options for the Federal Reserve. All participants said the economy had made progress towards the Fed's taper goal. That taper goal was substantial further progress, which they said had not quite yet been met. Remember, this was 3 weeks ago. Some appear to have changed their mind in the interim there, especially with that strong jobs report that came after this meeting. Most participants saw tapering this year, and they used the phrase in coming months for when the tapering would begin by various participants, but several, though, thought the taper should begin early next year. So at least back then, there was still a disagreement on the issue of the Delta variant. Delta variant underscored uncertainty out there, especially in foreign markets, but there was concern the Delta variant could delay a full economic reopening. So is there concern out there among Fed officials about this variant? And it was seen posing downside risk. On inflation, again, largely seen reflecting transitory factors, but there's more yet to come, Kelly, I think, in these minutes about the inflation situation. You'll remember that last time in the prior minutes, there was some concern that this idea of transitory could become transitory, as in spill over into next year. And I'll be reading the minutes as to whether or not there was more concern that the inflation problem. And I think, by the way, that's one of the reasons why we've seen some officials get more concerned and want to move that taper up earlier, because of concern that inflation lingers longer.
All right, let's go to Bob Pisani now with the market reaction. And we're seeing, the market is basically flat, Bob, on the day. But just in these past couple of minutes, there has been some movement upwards, most especially maybe at NASDAQ into the green. But you can also see on those charts we were just flashing in front of the viewers that the market seems to be liking what it is seeing and hearing. There's one. Bob?
Yes, we have moved about 7 points. In fact, the S&P went into positive territory. It's flat now, but it was 44.40, 44.41, so it moved about 7 points. I think on the headline, substantial further progress not yet met. So here's the debate down here. This is a few weeks ago. Jackson Hole is going to be the inflection point. At least that's what the discussion down here is all about. So remember, this whole argument, okay, so far we don't have enough evidence that we've made substantial further progress. But maybe at Jackson Hole, this is the discussion being held down here, we're going to hear that, okay, now we've got a lot of data points at this point. Unless we see things getting really negative, we will proceed towards the following. That's sort of an inflection point. And this is sort of the idea I think people are forming around Jackson Hole. So think about the week after that, we're going to have the August jobs report. What are we expecting? 750,000 jobs? So we've had 2 prior months were about 900,000. Then suppose we get in line for August. So we get 750. We got 2.5 million over 3 months. How much more substantial further progress do you need? This is at least the thinking down here, that the Jackson Hole is going to be a slight inflection point. And remember also, I don't believe Christine Lagarde is going to be there, and I don't believe David Bailey, the head of the Bank of England, is going to be there either. And so this is going to be a much more, I think, domestic-focused conference for people. So far, you have to admit, the communication has been superb. You've seen no real hiccups or indigestion from any Fed comments so far. This is a pretty modest move. I think some people hopeful maybe it's a little further down the road, but everybody believes tapering is going to start end of November, December, maybe January. They'll have 6, 7, 8 months to finish it, the end of the second quarter, and then they'll start talking about raising rates. And that timeline is being handed to everybody at this point. The messaging seems to be very spot on, and the market is indicating it's accepting the message, at least so far.
So, Ed Yardeni, you heard what Bob said, Steve, and Rick Santelli. The market seems to be reacting relatively modestly. In Jackson, around Jackson, there are literally bears. You're not one of them, quite clearly. There's nothing in this report that would derail your essential thesis, which is that technology and technology companies that are going to improve productivity and increase margins are going to lead the way in the market, correct?
Look, I know we all spend a lot of time on the macro. We spend a lot of time on the Fed policy, fiscal policy. But, there is an economy out there that's run by business people, by workers. And the reality is one of the major trends in our economy right now is a shortage of labor. We were running out of workers before the pandemic. The unemployment rate got to 3.5% in January and February of last year. And coming out of the pandemic, everybody's suddenly shocked that there's another labor shortage. Now, of course, some of these are pandemic-related issues that have kept workers from going back to work. But the labor force just isn't growing. It's growing 0.5%. And so I think companies are starting to realize that workers are scarce. You got to hug them, you got to hold them, you got to take care of them, you got to pay them more, you got to give them more benefits. And that's only going to make sense if you can increase productivity. And I think, fortunately, we have the technology tools that can augment the mental and physical productivity of workers. So it's a win-win situation, the way I see it.
Hug them, hold them, pay them more. Sounds as cozy as the bears out there, the real one. Anyway, Steve, let's get back to you for kind of a thought on this. It's also important to note that a lot of what these minutes are meant to do is kind of message the market, test the waters a little bit, right? This is all, we've had messaging from the Fed about the taper. Now the minutes kind of confirming that. And you have to imagine a kind of calm market response like this is what they're hoping for.
I think so, Kelly. But the question becomes is how cold are the minutes, right? There is a robust discussion in these minutes about whether to taper sooner rather than later. There is a defined group of doves who say, hold on, hold off, inflation could be transitory, the Delta variant presents downside risk, let's just wait a little bit longer. And there's a defined group of hawks in there who are saying, you know what, there's a lot of risk to inflation. Some thought it would be prudent to prepare for reducing purchases relatively soon due to the inflation risk. That's said outright in there. So the question is how things have changed over the past 3 weeks. We've reported there's been a movement, a coalescing around this September announcement with the possibility of an October and November taper. But Bob is right. We're going to learn an awful lot in Jackson Hole. He's also right, as I believe there will not be farm participants this year because of COVID. So it's going to be an America First Jackson Hole, if you will. And we're going to focus squarely on U.S. foreign policy. And look, Powell's either going to give the green light for a September announcement or he's not.
All right, thank you very much, Steve. And fellow panelists, thank you very much as well for your insights today. Ed, Rick, Bob, and Steve. We're continuing our Inflation Nation series, right, Kel?
Yes, we are. Today we're looking at packaging and materials. Manufacturers are seeing their costs rise up to 20% or more in some cases, and they're passing those price hikes off to customers. In fact, our next guest says these companies usually push price hikes down the chain and, quote, they don't do anyone any favors. Salvatore Tiano is a senior analyst at Seaport Research Partners focusing on packaging. So, Salvatore, tell us sort of how this inflation is moving throughout the sector and showing up to the end user.
Hello? Yeah, I cannot hear anything.
Sorry, Salvatore, go ahead.
Sorry. I'm sorry, I missed the last part of your question.
Sure. So tell us how these cost pressures are moving through the companies that you cover and how they're passing those costs along to their customers.
Yes, of course. And packaging, of course, is very critical. It touches everything, we pretty much use, from a plastic container or a beverage can or the plastic film that's everywhere. So you cannot really avoid it. And it starts when the raw materials, the metal, aluminum, tin plate steel, or plastic resins and other chemical prices started going up last year, and then with Hurricane Uri also. So this has been a tremendous amount. So the packaging companies have seen a tremendous amount of inflation, and a lot of them are trying to offset it, obviously, in order to make sure they don't erode their margins by passing this on to their customers, which are the consumer packaged goods companies. Some of them actually have contractual pass-throughs. Many of them do it based on the agreements they have. A few months later, if resin prices are higher, well, it's the consumer goods company that's going to pay that inflation, not the packaging company, which I cover. But there are others also that don't have this mechanism, and they're still going at it very strong because demand for packaging is extremely strong right now. Many substrates are sold out. So they're doing whatever they can to raise price, and obviously that should find its way to the end consumer at some point.
Exactly. So you're talking about packaging prices increasing as much as 20% or more in some cases, and ultimately this will find its way into the end consumer. The companies that you're talking about here, we don't often cover them, but this is a key part, obviously, of the supply chain. Amcor, Aptar, Ball, Berry Global, Crown Holdings, OI Glass, Sealed Air, Silgan Holdings, Sunoco. Who would you say you're most positive on right now?
I personally think that when it comes to inflation, at this point, Sealed Air is very, very well positioned. Actually, it doesn't have a lot of these contracts that I mentioned for the automatic pass-through mechanisms. That may be bad at some point, but given how strong demand is for packaging and for goods, they're actually going out with increases that are above and beyond what others that are limited by contractual and formula-based pass-throughs are. So they can actually get more pricing and more margins. And at some point, when raw material prices may decline, they can hold on to the pricing better than others. So I think it's a very well-positioned company at this point.
Sure. So your favorites there were showing them Sealed Air, Crown Holdings, and Berry Global Group, all down over the past 3 months, but up about 20% over the past year. I'm curious if there's anyone who you think is going to feel the squeeze a little bit more. We know that a lot of companies are able to increase their profit margins, like you've been discussing. Whatever price they take, they raise it a little bit more, and they kind of benefit from that spread. Is there anybody who might not have that luxury? They might see people substitute out to a different kind of competitor, come up with some other solutions versus paying that higher price?
Well, right now, these companies are pretty fortunate that inflation is going up across the board. So in the past, perhaps there could be some substitution across substrates from paper to metal or plastic on the margin, obviously, because it's not very easy to change something like that. But right now, pretty much every substrate is seeing higher pricing. So recovered paper prices are skyrocketing. Resin prices are very high, aluminum. So there isn't really anywhere for the consumer goods companies to hide. They have to pay no matter what packaging they're getting. Now, with regard to my companies, usually the biggest squeeze would be on the plastic resin side. Berry, some Notco products on their plastics business have seen pretty intense headwinds. That being said, everybody from what I've seen recently, has been handling things much better than in 2018, which was the last time we had very severe raw material and freight inflation.
Yeah.
And you can see it now. And Berry, that's why we have a buy on it, very attractively priced, and they've done a great job in strengthening their contracts to pass through these costs faster to their customers.
All right, Salvatore, thank you for your time today. Salvatore Tiano on the packaging names.
And coming up, from powertrain to power lines, we'll speak with an analyst who says EV demand will require a massive increase in the electric grid investment. And there are a few names that will benefit, as there always are. Plus, a market pullback could create a big opportunity in 3 sectors. Our guest later this hour has a list of names to watch and buy. And as we head to a break, some of the stocks that are hitting new 52-week highs.
Están saliendo las limitadas por abajo. Ha recuperado para mí lo que podría haber sido el suelo de la sesión. La verdad, sería más o menos el 24. Pero, sí. Ya, vamos a ver si cae el 5 este. Y aquí nos vamos a comprar un contrato. Ahí. En cuanto salga ahora en cinta, estoy mirando en la otra pantalla, ¿vale? Compras en cinta, intentaremos comprar un contrato ahí para irnos arriba. Tiene que salir la compra que sea más o menos clara. Bueno, lo que decía antes, podéis contactarnos ahí, también podéis seguirnos a través del canal de Twitch, que es Trading Capital, ¿vale? Y Capital con 2 Is, ¿vale? En Twitch, donde podéis contactar ahí, donde es que no sale compra, ¿eh? Ahora sale un poquito, pero, a ver, no me desagrada, ¿eh? Lo que sale. No me desagrada nada.
Order submitted.
Vamos a coger ese, a ver si nos coge.
Order filled.
Es otra que también te coja la orden, ¿sabes? Nos vamos a poner debajo de mínimos, obviamente. No le daríamos más que eso, obviamente, que ya son unos cuantos puntos, ¿eh? A ver si el objetivo de que nos lleve al... No estaría mal, ¿no? Es el primer nivel de ineficiencia. Sí. Vale, nos podéis seguir en Trading Capital. ¿Vale?
Welcome back, everybody. We're keeping a close eye on markets, as tends to happen, Tyler, around events like the minutes, like the, maybe not the beige book to the same extent, sometimes to the actual Fed decisions themselves. There's this kind of initial reaction one way and then a bigger reaction the other, and that's exactly what we're seeing in stocks right now. What initially was kind of a treading water moment has all of a sudden seen the Dow turn lower 166 points, and the NASDAQ is down about 29. Remember, there was a lot of rhetoric about the taper. This follows comments from James Bullard earlier today about a pretty aggressive taper timeline. There's the S&P down about 0.4% right
I
now.
wonder what they saw there in the language that came out just a few moments ago. Initially, as you pointed out, we were just talking about the fact that the charts were showing a slight increase there, and now a rather precipitous decline. I wonder what the words were that got in investors' heads.
Yeah, and I doubt it was the fact, some are now picking up on this idea. Are they going to actually taper treasuries as much as mortgage-backed securities said doing mortgage-backed first? I highly doubt something like that would be moving markets to this extent. Perhaps we can show treasury yields. There we go. 1.277. So, again, not hugely hawkish. We're not seeing huge spikes or anything, but obviously a move to the upside. Same thing we saw in the dollar as well. Now it's a question of if this trend asserts itself into the close and then into a few more sessions. So we'll be watching this one very closely.
Well, maybe we'll get Bob Pisani back to explain it to us.
Yeah, exactly. America's on the cusp of an energy revolution. The rise of EVs is going to change the way energy flows across the country. You may not need fuel, but you definitely need electricity to get going. Is our grid ready, especially given the pressures it's been under lately, to shift from powertrain to power line? Our next guest says no. Massive infrastructure will need to take place, and there are some stocks which will benefit from the build-out. Let's welcome in Chad Dillard. He's a senior analyst covering U.S. machinery for AllianceBernstein. All right, Chad, welcome. I'd like to get to this actually right from the stock point of view. Tell me about Quanta Services, why it's a name people should think about owning as this massive transition to EVs takes place.
Yeah, absolutely. Good afternoon. Thanks for having me on. So the mass adoption of electric vehicles is going to drive nothing less than a wholesale shift in how the energy flows in the U.S. And the current grid infrastructure is fully insufficient to actually realize that. And I think transmission contractors like Quanta Services really benefit. There are a couple of reasons why. So first of all, EV growth is going to drive 70 gigawatt increase in electricity demand. It's going to be entirely renewable, and that's a really big positive for transmission because renewables are built in low population density areas, and they need transmission to bring it to the high density population areas. Second, the shift to electricity is actually going to increase the complexity of energy distribution, and that's just going to mean more grid investment. So the density of the electric grid needs to go up because if you think about it, today we drive our vehicles to the gas station, one of 150,000 filling stations in the U.S. But electricity actually will flow to one out of 140 million homes in the U.S. And the grid's really not prepared for this.
Yeah.
In some states right now, the U.S. The AC usage is actually not even it's too high. And think about plugging in EVs as well.
Yeah, sorry, Chad. I was just going to say that we're all thinking through the heat waves that we've experienced in parts of the country where, people couldn't even get AC on. There were deaths from heat. The grid is stretched already for all of these different reasons, and then you add this on top. So you like Quanta Services, which has doubled over the past year. You think it can keep going to 107. That's your price target. Jacobs Engineering, Agco, Cummins, Trimble, they're also outperformed. Are there some common themes there with those picks?
Yeah, definitely. So I think, over with Jacobs, who's a very big beneficiary of the overall infrastructure build out, they're actually at the tip of the spear. So they really focus on the design side. If you think about the broader infrastructure bill, there's not enough shovel-ready projects. And so you're going to see a lot of the first funding going towards design. And they're one of the key marquee players there. So I think they're going to be really well positioned for this overall trend.
What percent? Is it 100%? Is it something less than that of the additional power generation that is required will be renewable? It was not that long ago, Chad, that everybody was talking about, well, let's put up another gas-fired power plant. Our former parent, General Electric, was huge in that business. That business has just melted away, right?
Yeah, absolutely. And I think it really comes down to the fact that the levelized cost of energy is falling so quickly from renewables. And then on top of that, if you're thinking about, one of the big drivers is just, decarbonizing transportation. So it makes a lot more sense to, have your energy sources actually truly renewable when you're switching over to EV.
All right. Chad, thanks for joining us today. Again, a number of different ways to play this huge shift in driving and what it's going to mean for the electric grid, especially with the infrastructure bill in mind. We appreciate it. Chad Dillard with AllianceBernstein. Further ahead on the show, the Biden administration also wants solar power to account for 40% of electricity generation by 2035. That's up from just 3% today. Even with solar dropping in terms of costs over the 70% over the past decade, there's still a ways to go. We're going to tell you about that. Plus, the slings and arrows of Robinhood's fortune. The company reporting results after the bell. What investors need to know when Power Lunch returns.
Insisto, ¿vale? Puede ser muy apetecible operar este tipo de noticias, etcétera, etcétera. Bueno, este tipo de estrategias noticias. No es recomendable absolutamente para nada. Mira, ahora sale la primera limitada de venta que ya no me mola nada. En el 36. Puede frenar el precio, podemos entrar en corrección. Y ahora es donde me tengo que plantear. Mira, ahora aquí en cinta han entrado 179 ventas. Pero bueno, las compras detrás han estado también empujando. Ahora tengo que estar alerta. ¿Vale? Bueno, lo que os decía, no os recomiendo absolutamente operar esto, ¿vale? Y menos si no lo tenéis por la mano, si no tenéis una capacidad de disciplina excelente, ¿vale? Porque se os puede ir la cabeza, ¿vale? Se os puede ir la cabeza. No hay nada peor que una buena operación. Mira, una mala operación, yo siempre digo que una mala operación es una bofetada de realidad, ¿vale? Entonces nos saltan las alertas. Pero una buena operación es una dosis extra de euforia que realmente es una de los grandes hándicaps del trading, ¿vale? Entonces, insisto, no hay nada peor que eso. O sea que no os dejéis llevar por eso. Entonces prefiero que os deis una buena torta para que valoréis dónde me tengo que ubicar nuevamente, que no un exceso de euforia en una operación tipo así, ¿vale? Y decir que soy el trader más guay del mundo, ¿vale? Y nos dejemos llevar por esos cantos de sirena que no nos llevan a ningún sitio. Bueno, yo creo que es cuestión de tiempo que al final esto lo vayan a romper arriba. Tampoco, en este caso, no me quiero calentar la cabeza sufriendo mucho en si se lo llevan o no se lo llevan para ponerme en trailing, ¿vale? Entonces, si rompen máximos por arriba me pongo detrás de aquí y si no, me planteo salir ya, ¿vale? Bueno, entonces ya rompen, a ver si subastan. Venga, perfecto. Y ahora me parece bien. No hace falta estar tan cerca, también lo digo, ¿eh? Podemos estar un poquito más separados, no pasa nada, ¿vale? Cuanto menos ahoguemos al precio, mucho mejor. ¿Vale? Esta sería la siguiente que nos queda. ¿Vale? Y por último tendríamos otra, pero esta...
Welcome back, everybody. Markets been all over the place here in the last few minutes. The Fed's minutes came out at 2 p.m., even though it's now almost half past high. Dow's down 78, was down, I think, as much as 160.
About 150, 160, not 5 minutes ago.
Right, and that was about 15 minutes after the minutes actually came out. Here you can see the big down move, the spike back up. It feels like trading community is trying to digest all of this taper talk. We can turn to, there's the NASDAQ, by the way, which is now back in positive territory. So you tell me what's in these tarot cards. It's up 13 points. Here's the S&P still down about 8. And let's do a quick check on oil as it closes for the day. The message here, we still see declines in the range of almost 2%.
All righty, time for today's power movers. First up, Lowe's soaring nearly 10%. The home improvement retailer beating earnings and revenue estimates and raising guidance.
And Viacom CBS is higher. Wells Fargo upgrading the media giant to overweight from equal weight, saying they're poised to benefit from industry consolidation.
And finally, Morgan Stanley reiterating its overweight rating on Roblox. The firm remains bullish as the gaming company continues to retain users despite the economic reopening. For more on these top calls of the day, go to cnbc.com/pro.
Ahead on Power Lunch, climate consequences as the severity of national disaster seems to get worse. FEMA is overhauling its flood insurance pricing, could have huge impact on how much you're paying.
Plus, our next guest sees volatility ahead and has 3 stocks to buy on any dips we see. We'll be right back.
Vale, pues oye, os agradecería mucho los que estéis viendo el vídeo en diferido, ¿vale? Tanto en YouTube como en Twitch, que os unáis al canal, ¿vale? Y así de esa manera podemos hacer un canal más, más guay, más interesante, más productivo para todos, ¿de acuerdo? Y podemos disfrutar operando juntos. Obviamente me supone un esfuerzo hacerlo, porque la obligación de estar cada día, si quiero hacerlo, de estar streameando cada día la operativa, y no me importa, porque yo estoy operando cada día realmente. Lo que no quiero hacerlo al final es para 4 personas, ¿me entiendes? O sea, si lo hago para un grupo considerable de gente, en la cual haya muy buen rollo, muy buena armonía y vayamos todos ahí a una y aparte de operar, ganar dinero, ¿vale? Nos lo pasemos bien, ¿de acuerdo? Y esa es la idea. Entonces, si no me sigues en el canal todavía, vete a Twitch, ábrete una cuenta, es gratuita, ¿vale? Una vez tenga la cuenta gratuita, le das a seguir, no a suscribirse, no os estoy pidiendo dinero, no os pido dinero para que os suscribáis, ningún tipo de donación, para nada, simplemente seguir, ¿vale? A mí el hecho de ver seguidores y que va incrementando me da más ganas de hacer cosas y de compartir con vosotros, como en este caso, ¿vale? El tema de la noticia hoy de la FOMC, ¿vale? Y me da fuerzas, me da ganas, porque realmente vengo de cerrar la escuela de trading, me he agotado mucho dando formación, entonces ahora la formación que voy a dar va a ser muy puntual. De hecho, he rechazado en estos meses previos, bueno, estos meses por lo menos llevo ya, bueno, no, miento, hace 2 meses o así, 2-3 meses le di a una persona, quería un curso de order flow, pero solo él.
Welcome back, everybody. The Biden administration is making a big push for solar, targeting 40% of U.S. power to come from solar by 2035. That's up from just 3% right now, and it's the subject of a CNBC.com article focusing on the costs of solar and how they'll need to decline even more to meet these ambitious goals. Pippa Stevens is over there. She just wrote the article, and she has more. Pippa.
Hey, Kelly. Well, heavy investment to the tunes of billions of dollars will be required to make this happen. The sector's growth rate will need to triple or even quadruple by 2030, according to a memo from the Department of Energy. And supportive policies will be key. The DOE outlined several areas of spending that will boost solar, including tax credits, investing in tech innovation, as well as building out community projects in low-income areas.
Order filled.
Solar stocks are getting a boost today, and the Invesco Solar ETF is up 2%. Array Technologies, Flat Glass Group, Shinji Solar Holdings, and Shoals Technologies are leading those gains. However, solar stocks are still down for the week and over the last month, plagued by supply chain and trade concerns. The White House is cracking down on silicon imports from China's Xinjiang region. And here in the U.S., a petition was filed yesterday by some manufacturers asking that tariffs be extended to China-linked factories in Malaysia, Vietnam, and Thailand. The Solar Energy Industries Association saying the consequences of this could be, quote, severe. So, Tyler, a huge growth opportunity, but a lot of headwinds facing the industry right now.
All right, Pippa, thank you very much. Pippa Stevens. Our next guest calls for a pickup in volatility and a pullback, which she says could create a big buying opportunity for investors like you. She's identified 3 stocks in 3 sectors that are underperforming so far this year: utilities, discretionary, and staples. She calls them best-in-class picks. We'll get to them in a moment, but first, we bring in Rachel Aiken, Vice President and Portfolio Manager with Rockland Trust. Rachel, welcome. Why are you persuaded that a pullback and more volatility is just around the corner?
Well, Tyler, good afternoon, and thank you for having me. I think all of us in the investment community have sat and watched just really this Teflon market where we've seen the market climb uninterrupted by a 5% correction for more or close to 200 days. And seasonality tells us August and September are generally more volatile months. But I think part of the volatility we see is predicated on the virus as well as valuation. But in my eyes, I think it's really can be simply put by this handoff that we're seeing across so many areas that's really injecting a lot of uncertainty. I think we're seeing it this afternoon with the release of the Fed minutes. So much of what we've learned has really been widely telegraphed, but there's just that uncertainty as we hand off fiscal and monetary policy to the economy to kind of run on its own is creating consternation. And I think the market's going to continue to feel volatility around that, volatility around the handoff from goods purchasing to services purchasing. And we're really looking for, the parent who's helping their child ride a bike. We're entering the phase in the economy and the markets where we're going to take off the training wheels and take our hands off and let them ride away and hope that they're steady as they go.
All right, let's get to some of these choices that you have, and I assume in discretionary is number one, and that would be Pepsico, which sort of leads the way in snack foods like Stacy's pita chips and potato chips and Doritos and so forth. That's a pretty recession-proof and volatility-proof pick.
Exactly. So Pepsi has been a real ballast in our portfolio for the better part of a decade. And you're right, it's that perfect combination of salty snacks and beverages that have really had it in the number one position snack-wise globally. What we think is so important with Pepsi is the ballast that you get with the balance sheet, a nice dividend, again, the high-quality business. But we're also seeing catalysts with their investment over the years now paying off as far as manufacturing and productive capacity. But also, really, if you look at the numbers that they just reported, it's interesting to see that the most COVID-hit areas of their business, the away-from-home businesses, are recovering more quickly. And the at-home business is staying strong. So that's translating into strong organic growth, double-digit increases in their sales in their beverage business, just a business running on all cylinders.